Hi, it's Adil bringing you inter-market analysis of the FTSE 100 for end of day. Basically, end of day analysis. It's Monday, 3rd of November 2014. Okay, so basically what happened? Yesterday's videos, I was calling for a move higher. Basically, I finished, well, I've not finished yet, but I'm currently minus 60, minus 75 points for the day, I think I am at present. So I got stopped out of my FTSE long. I also took an Aussie long as well on the back of inflation data, and I got stopped out on that. I took a Kiwi long as well, and I got stopped out on that. So it was a bit of a poor day overall. The only trade that I actually had successful was the long DAX and the longer Nasdaq, but even they didn't really last. I closed them for plus 45 before the market reversed. So basically, what's happening here at present? Okay, so why hasn't? And this has been a conundrum to me all morning. Why haven't the European markets moved higher in concert with obviously the Asian markets? Because obviously Asian markets overnight were quite bullish. I mean, Japan obviously was off on holiday, but even then we did have one second. Yep. So even though it was off on holiday, we did have the actual futures open. Obviously, the futures are quite bullish. If you look at the chart of Japanese futures, obviously that's based in the Nikkei itself, as you can see, is at a high. Okay, and that's failing to propel Europe higher. So it's a concern that. Okay, and also it's been failing to propel the US markets higher to a certain extent as well. So again, that's quite worrying as well. So there's two worrying some signs. Okay, with regards to the market. So slightly concerning when Japanese Nikkei is falling quite considerably, as you can see. I mean, it's fallen. It is making a somewhat of a comeback now. I mean, you can look at a chart of the USD JPY, for example. As you can see there, quite a concerted move higher. And then you can look at a chart of the Euro JPY as well. I mean, Aussie JPY tells it all. I mean, look at that move higher there, quite a substantial move. Also, Euro JPY, as you can see here, quite a move high. Obviously, we've got the HNS formations now, and that's one of the reasons why I'm actually short the FTSE from 6495 with the on the day trading with the subscribers and the live analysis service. Okay, so yes, that's basically a conundrum. Okay, so certainly, given the fact that we have the Nikkei obviously got appreciating as high as 1.4250 on the Euro JPY. And the USD JPY went as high as the 114 handle, and still we failed to rally on the FTSE. Is a troublesome sign. Okay. Now, obviously, today the reason why the FTSE was down, I mean, a lot of the individuals are blaming the banks. I mean, just look at the Reuters platform here. Basically, you can see that the top performance today, you had by the looks of it. I mean, ever since obviously Ryanair's results, etc. The travel and leisure obviously have been moving higher. And then obviously you had Kingfisher, Centrica, Associated British Foods, Royal Bank, HSBC, one of the biggest fallers. So the banking sector was down quite heavily today. Okay, so sectors, as you can see here, consumer services, technology, everything else was more or less down. I mean, the oil and gas was down, consumer goods, financials were down, utilities were down. Now the reason why the commodities have been hit hard today, and obviously this is not something that I was obviously privy to, is number one, obviously tapering concerns. So we had Mr. Fisher come out midday and talk about QE and it being a panacea, it being hoping that it didn't even occur, and he was talking down the inflation, deflation concerns. So basically he was hawkish. So obviously that sent the dollar higher, and obviously adding the fact that the yen was obviously appreciating as well. And the actual oil price obviously has now tumbled to a 29-month low after the Saudis cut their forecast, their price cut. So that certainly doesn't bode well for the FTSE if commodities come under pressure as well. Okay, gold hasn't been moving higher even after the BOJ did the QE program. So that itself is a concern as well. So that really is baffling as to why the US markets and the European markets aren't considerably higher. Yes, the US markets are higher in the sense that they did make a new high, okay, the Dow and the S&P, but then they've obviously fallen back ever since. So that's a troublesome sign. That's not exactly a bullish signal. So that's something that you need to be wary of. And obviously HSBC dragged the FTSE down today. And even though we had the PMI data out of Europe, wasn't exactly dry. I mean, it wasn't dire. I mean, you had Chinese data that was weak. Okay, I understand. But even then, that wasn't as bad as everybody expected it to be. So there was certain numbers that hit the target, certain numbers that were below the target, but nothing, not a drastic miss. Same with the PMI data out of Europe. I mean, some of the German data points missed, some data points hit. So again, not much of cause for concern. I mean, you had France beating, you had UK beating, I think you had Spain beating. Italy was probably the only weak spot, but that's been known for some while. So, but with regards to the UK, the PMI data obviously better than expected, so therefore that obviously was biased bullish. Okay. So that's why the conundrum occurs, okay? That's why it's quite hard to understand. But now we know why, because Mr. Norton has come out with his comments and stated that basically don't expect a rabbit to be pulled out of a hat each time there's an ECB announcement, obviously, or ECB presser. And as we all know, there is a presser this week, okay, with regards to Draghi. Draghi on the wire is putting the emphasis on fiscal policy as opposed to monetary policy. Norton changing his tune a little implying no QE this year. People should not expect the governing council to pull a new rabbit out of his hat at every meeting, etc., etc. So basically, he's downplaying expectations. So obviously, ever since Mr. Kuroda did the QE, everybody expected QE to occur in Europe as well, because obviously it's all about currency wars now. If there was an article out today about currency wars, so the fact that the yen is depreciating and dropping so fast, that's going to take away trade from US and Europe. And Europe is the last place that you want to take a trade away from, given the fact that it's already in a deflationary or fighting a deflationary spiral, and obviously fighting the concept of austerity that's ruining its ability to grow. So obviously unemployment high, there's lack of job growth there, etc., and obviously exports, etc., so on and so forth. So basically, that certainly doesn't bode well. So the fact that the Japanese yen is depreciating and acting like a carry trade and inflating asset prices internationally isn't exactly doing the trick for Europe, okay, because it's actually taking away trade in terms of its lower currency. Similar could be said for the FTSE, and the similar could be said to a large extent to the US markets, but as we all know, the USD JPY, the Aussie JPY, the NZD JPY, the Euro JPY have been interwoven and have been moving in tandem with US markets. So when they move higher, the US markets move higher because of the carry trade, okay, because of the carry trade. So basically, that's what we face. So the FTSE is down, minus 58, and obviously the oil sector has been hit the hardest. So let's find out. Let's try and do some. Let's dissect this, and let's do an autopsy report. Okay, so inverted head and shoulders formation, like I've already explained, that's one of the reasons why my bias was bullish and I wanted to go long. We've not taken out the pivot low. The pivot low there is 6465. So provided 6465 holds, the market does still remain bullish. Okay, and the inverted head and shoulder. Also, even if the inverted head and shoulders neckline holds. Okay, so 6420. So 6465, 6420 must hold for the bulls for this rally to continue. The next stop obviously being 65, 6600, etc., and then obviously 6700, and we move higher. Well, that level must hold. Okay, 6465, 6425, two levels. Okay. Now let's have a look at the FTSE all share index at the moment. It certainly seems to be putting a potential hanging man style doji. Okay, so that's something I'm going to keep an eye out for. Okay, and let's try and put more emphasis on the FTSE 350. FTSE 350 did hold that resistance level, so previous support equals resistance, obviously, for the FTSE for a pullback. Now one can call this an inverted head and shoulders as well. So there's your left shoulder there. Okay, you go down, you create your head, you go back to the neckline, you pull back, and obviously we potentially break higher, given the fact that the Kool-Aid is from Japan. But again, this is all hypothetical right now, so we'll have to keep an eye and keep a focus on that. FTSE 250 just an inside bar, so no real concern there. Obviously the cable still remains below the 1.6 level, so that should help exports, etc. So certainly inverted head and shoulders, and there's no threat of that being closed. If anything, it's bullish because it's consolidating the upper 25%, that green candle, right? And the volatility index certainly did hold the level there and bounced and is into potential resistance, but certainly room there for the FTSE to go higher, and obviously that means the FTSE 100 will drop in due to the inverse relationship. Okay, so that's basically the theme with regards to that. Okay, and this is obviously dependent on the Dow and the S&P. So S&P at the moment, if you look at the S&P and the daily chart, we still seem to be struggling with that double top. So the fact that we can't close above that and it's a doji so far does indicate potential exhaustion or potential reversal. That's one of the reasons why I switched my bias to the short side. Okay, so now let's have a look at the other factors to watch as well. Is obviously the Dow Jones. So as you can see, there's a triple top formation there intraday. So obviously a lot of weakness there for the German Dow. Whether it's consolidation, etc., or whether it's a failed move, we'll soon find out. But from my perspective, definitely biased down. So given the fact that obviously Mr. Fisher was hawkish, the yen is failing to propel European markets, which is a bearish sign. Okay, whenever that usually tends to be an exhaustion. The USD JPY now and Euro JPY are obviously looking weak. Oil price now is back down to $78 a barrel, which obviously doesn't bode well for the FTSE. So these are all variables, or these are all factors that obviously are bearish for the FTSE 100. So that's basically what we see from that perspective. Okay, so with regards to pharmaceuticals, obviously we went and potentially closed that gap in the farmers. That's one of the reasons why the farmers were definitely bearish today. Whether or not we can push through and make another high is debatable. Okay, banks again certainly weak today, very very weak from my perspective. I expected them to move, especially with the Japanese QE, and that failed. So again, with regards to the oil sector, as you can see there, double top, and obviously that will move. It certainly gets worse given the fact that oil is now at $78. Okay, so quite a sharp drop there, almost a $3 drop on oil. Okay, so that certainly needs to be factored in tomorrow. Retail itself, obviously retesting their inverted head and shoulders neckline, but given the fact that a lot of the retail, especially Next, has been coming out with negative earnings, then this may well be facing reality, but we'll see with regards to the retail sector. Okay, so let's have a look at any other sectors that we can have a look at. Aussie JPY, so Aussie USD and Kiwi dollar obviously weak. That doesn't help the FTSE 100 from that perspective, because they are risk FX, so they're usually another barometer of risk regardless of what the central bank is doing in the country. Obviously mobiles certainly into resistance, and obviously the travel and leisure obviously certainly have moved higher quite considerably and tend to be back at double top resistance. So that's going to be interesting to see what happens tomorrow with regards to that. Okay, so overall not looking good. No real bullish signs there. Certainly signs of potential exhaustion, but obviously QE rules the roost. Okay, now the reason why I went long was obviously I was looking for a retracement and obviously rally higher back into that 6.590 level. Obviously that didn't transpire, given the fact that commodities are weak, and obviously they had inside information with no QE via no Watney. Okay, so that's basically where we are. Even with stronger PMI data out of the UK, even with stronger ISM data out of the US, still we failed to rally, which is a worrying sign. When you see price action like that and a failure to rally, then it usually means something else is brewing in the background. And as we know, Mr. Nowotny has come out with that, stating that obviously there's no QE this year. So obviously they'll front run that information. That's the only explanation as to why the European markets haven't played catch up. Okay, so looking at a 10-minute chart for the FTSE 100 now, we are into obviously looking for gap fill support. So gap fill support is 6465, so that'll be a downside target for the FTSE from my perspective. Once it closes that gap, then yep, we can certainly start to look for the upside. And but there is another gap on fill below that 6360. Why I don't expect that to be closed, given the QE, etc., etc. So watch out for 6465. That'll be a potential target for the downside, and I'll have to reassess and see exactly where the market goes from there. Obviously the S3 level, support 3 level, is 6475, so that's something that I'll bear in mind. Other than that, there's not much reaction with regards to the FTSE 100. Obviously 6480 and 6465 are key support levels. If that goes, then obviously it's even more bearish. So we'll see whether or not this oil price can certainly have an effect on the FTSE and force it lower. Okay, so that's basically where we are. Okay, so the theme is QE. Obviously the QE blitz from Japan has failed to send Europe higher, and that the only reason why it's failed to send Europe higher is because that they already knew with regards to Mr. Nowotny stating there'll be no QE, and obviously Chinese data weaker overnight. So them two obviously double whammies are hurting the FTSE itself, and obviously hurting European markets. But we'll see whether that lasts. Obviously, when you have central bank obviously printing money, that generally tends to trump all bad news altogether. So we'll see. We'll see whether the bears win or whether the short squeeze party obviously wins at the end of the day. Okay, folks, I think that summed up the FTSE 100. So risk on, risk off, wax on, wax off. Goodbye now.